app monetization company AppLovin Corporation is up 224% year to date in 2024. Of course, I'm happy about that because AppLovin is a stock I've rated as a buy. So now investors are asking me in the comments, is it too late to buy AppLovin stock? Is it time to take profits? Can we still buy AppLovin stock? What do you think? I'm going to answer those questions in this video here. I'm going to review AppLovin Corporation across several critical financial categories, including revenue, profit margin, cash flow, return on invested capital, valuation, the balance sheet, and its prospects over the next 5 years. I'm going to do that all in this brief video here. As you can imagine, there's a lot to cover. So let's get into it after this brief message. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So like I highlighted, AppLovin stock is up 224% year to date. One of the better stocks I've recommended here in 2024. Of course, there are some that I've recommended as a buy that have not worked out so well. Hello, Intel. But AppLovin is one of the stocks that I've recommended as a buy that's performing excellently in 2024. I last updated this recommendation as a buy on April 15th, tax day here in the United States. I'm going to update this recommendation here in this video after reviewing the latest financial results. Starting with revenue, you'll notice AppLovin over a trailing 12-month period has nearly quadrupled revenue from 2021, where it was at $1.5 billion in revenue. That's now up to $4 billion in revenue in the trailing 12-month period. But more impressively is the company's really turned things around on profitability. Like many software and tech companies, they really started to get costs under control in late 2022, and that's really paying off here. Its operating profit margin is now up to a whopping 30% in the trailing 12-month period. That's up from negative numbers in early 2023. So kudos to AppLovin management team here for making such a drastic improvement in about 2 years' time. So kudos to AppLovin management team there. And similar story with its cash flow from operations, which really jumped from 2023 levels of around 15% all the way up to 35% in the most recent trailing 12-month period. The company's really demonstrating improvement in key financial categories. Looking ahead, the analysts on Wall Street that are following AppLovin stock, they expect it will grow its earnings per share by 20% per year over the next 5 years. This comes on a group of analysts that follow the stock. And so some might think it's growing earnings per share faster than that. Some might think it's growing earnings per share slower than that. This is a collection of analysts that are following the stock. Now, nobody knows what's going to happen in the future, so take their estimates for what they are, estimates. But these are analysts that are close to the company. They have a connection to management most likely, and they get their questions answered with a priority response rate, kind of like how the members on my channel, they get priority response to comments. And it's similar when the analysts on Wall Street are following a stock. If they have a question, they get access to management, and so management will answer their questions. And so they're more capable when they're making their earnings per share forecast because they can have information to make their forecasts that they need. Now, when we look at the company's balance sheet, they have $3 billion in net long-term debt. And when we compare that to revenue of about $4 billion, the debt to revenue ratio is a little bit elevated, but the company generates strong cash flows and strong profitability enough to service that debt. So long as the company doesn't hit a disaster, its debt levels are certainly serviceable. Nothing to be alarmed about just yet, but it's something to be informed about, to be sure. Now, the return on invested capital measures how good a company is at taking investor money and turning it into profits. It's an important metric that I consider when evaluating a stock to buy, hold, or sell. And AppLovin at 19%, again, like its other critical metrics, it's demonstrating strong improvement here again at 19% return on invested capital. That's up from negative numbers in 2021. So we've looked at so far the company's revenue, which is growing. profit margins improving, cash flow from operations improving, return on invested capital improving, all heading in the right direction and at a very healthy rate, you can understand why the stock price is up by so much this year. The company's improving significantly across several of its vital financial metrics. And finally, you can understand why I've rated the stock as a buy, because the valuation, even after increasing by so much, it's still not expensive. It certainly wasn't expensive to start the year. It was trading at a forward price to earnings in the low double digits, and it's now trading at a forward price to earnings of 25, which is still an attractive valuation for a company that's improving its revenue, its profit, its cash flow at the rate that AppLovin is improving these critical metrics. So to update the stock and to answer all the questions I highlighted in the video, is it time to take profits in AppLovin stock? Is it a good time to sell, or can investors still buy? I'm keeping the stock rated as a buy, and I'm updating that today on September 24th. I think the company deserves the stock price increase it's experienced. I think the company has earned the stock price increase. And even at its current valuation, after soaring by over 200%, I still think the stock is a buy. There are times when a company's stock price increases by so much so quickly that I say, you know what, it's time to sell, it's time to take profits. I did that with Palantir. Remember, I recommended Palantir stock as a buy, and the price increased by so much so quickly that I said it's a good time to sell and take profits. I did the same thing with Supermicrocomputer. I had Supermicrocomputer stock rated as a buy in January, and then around March, I told investors it's time to take profits because it went up by so much so quickly before the profits increased enough to substantiate that price increase. With AppLovin, the price has increased, but so has the performance, so has profitability and cash flow and everything to support that higher valuation. So AppLovin is one of those situations where, yes, you're paying a higher price, but you're getting so much more in return. So it justifies the higher price that you're paying today versus the price that you were paying 6 months ago, 9 months ago, 18 months ago. So to reiterate, I still like AppLovin stock. I still think it's an excellent growth stock to buy. I still think it's undervalued, even though it's increased by over 200% in 2024. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.